Welcome back. We have been looking at 20 years of wealth creation studies authored by Motilal Oswal. We have the author of these 20 years of studies, Raamdeo Agrawal, and to question him and get the best out of these 20 years of lessons, I have with me as my co-anchor Ramesh, Damani, himself a veteran stock picker.
Do you see technology as a threat to longevity, that mega caps can't remain mega caps for more than 10, 15 years because technology disrupts almost every business?
But in the last 20 years of study, I have realized that even when the technology onslaught was not that high, say in the last 20 years, then also the leaders keep changing.
That's a static economy, a crony economy, as opposed to
Let me ask you one thing. What could be the 1995 number one company?
In India?
In India?
Must be Lever.
It was Steel Authority of India Limited.
Okay.
13,000 crores market cap, by far number one market cap company. Yeah. Today it is struggling to be, kind of even in top 120, 130 companies.
Which actually brings me to the favorite question. Yeah. Are there any characteristics of sectors where you will find the winners? Is it always difficult to find winners in resource stocks and more likely to find winners in retail stocks, because you will have brands in consumer stocks?
Yeah. So these are all point of time. The evolution of the economy is continuously evolving. The winners of the business are different. In 2000 it was the tech boom. It was by far, it just engulfed the whole world. Wipro was 3 lakh crores market cap for 3,000 guys working for them.
And made him the second richest individual in the world.
For a few days.
So at the current juncture, would you therefore think that renewable energy could be the next big thing? Would you look for that idea?
No, not now. Because my first filter is there should be a profit and profitability. And I should smell a lot of profit is going to be made. I must smell that profit. Say today some company is making 100 crores and I should smell a profit of 5-10,000 crores. Then I'm willing to spend my time and buy them. And probably you are seeing that particular profit, so you go and buy. I'll not buy till I smell that.
Raamdeo, to finish off your formula, P is for price in the formula, and there is no substitute for buying a stock cheap enough. There's absolutely no substitute in this business.
Sure.
But you always favored a secular story as opposed to cyclical stories. But could cyclical stories be cheap enough that they can make good money? Maybe not fitting the L criteria, but definitely making a lot of money in it?
Yeah, it can. See, there are a lot of styles of making money. And some people are masters of cyclical stocks. Some people are good at secular stocks. So I have tried cyclical stocks. Every time I buy it wrong time and sell it wrong time. So I stopped kind of trying on that.
Your sweet spot was
my sweet spot is secular
consumer facing,
what I don't want to sweat too much. B2B and all. So I love to buy B2C businesses, leader businesses where bargaining power is better, terms of trade are better, and the scalability is very high. So like I used to hate aviation companies, but once the Indigo came, so it's a darling. So
you told me once you'd never buy an airline stock. What changed your mind?
Because of the business model. Okay. They have this company.
So it wasn't against airlines, it was against the practicing business models. Or is it because the fuel price went down, so you looked at it again?
No, fuel price was one aspect of it, but second is the business model these guys have pursued. The entire fleet is on the operating lease, so there is no load of the fixed cost here, and working capital, they can always sell 3 months tickets, this thing, so they are literally working on negative capital employed, and they have a huge competitive advantage compared to other players in here, and other players are bankrupt. So it's and then of course the oil prices is
a huge tailwind
right now. All the airline stock all over the world.
Raamdeo, 20 years into your study, the index was, Sensex was 4,000 roughly when you started, closer to 27,000 now. You've had unbelievable 9x. What do you know now that you wish you knew when the Sensex was 4,000?
Wow. I wish I knew all the findings of 19 studies then. The power of equity is so massive. When you see why we are doing this 20th study, we didn't understand the power of growth. Where to find growth, where to search for growth, and how to calibrate. See, a 40% growth for 10 years can take you to sky.
You own the world. Pretty much.
So, but India produces those kind of companies. I bought into, like Infosys happened.
We all have.
Infosys happened right in front of us. We didn't know the mathematics of investing in Infosys.
Those kind of growths.
Yes. Raamdeo, Ramesh, you'll have to end with giving something to our viewers in terms of how they should look for stocks. So now we are probably entering globally a secular, a low growth. Some people even call it secular stagnation. So to that extent, said Indian growth will be suppressed. All the more reason why we have to look for those bright sparks of growth which will always outperform the market. Where should the young men and women look for that next big idea?
So first thing is, don't bother about this global macro and all. Okay, just don't bother about it. Everybody will be wrong. I can bet everybody will be wrong. It will be a robust growth, fantastic growth. Look for your few companies' growth spots. For every action, there is a reaction. If the commodity prices have collapsed, what was built in 15 years, it is collapsed in 15 months, there will be a lot of companies which are benefited. Today, focus is on the companies which are destroyed. People are not focusing on the huge benefits which has gone to aviation or car company or paint companies, packaging companies. Nobody is talking about them. And you see the quarterly results. All of those guys, 15% top line growth, 80% profit growth. From where it is coming? It's all coming because of this $1 trillion gift from the oil industry. So there will be a lot of spots where there will be companies, businesses which will be prospering. One, because of this external factor, but I think the biggest magic is the entrepreneur, and particularly Indian entrepreneur, who is the first generation entrepreneur who does the magic of converting a simple 100 crores or 200 crores to billions. I mean, look at what Infosys has done or what Asian Paint has done. They started with literally $100,000 or $50,000, and today they have created a 30, 40, $50 billion empires with billions of dollars of profits yet to come.
And dividends paid out.
Dividends paid out. So I think we have to look for this opportunity. This is an exponential time for India. This is a point of time for India and Indian businesses.
Absolutely.
There won't be any dearth of growth spots or investable spots. But you have to work hard to find those spots.
That's 20 years of successful experience speaking, and I have with me on my side to question 30 years probably or 40 years of experience. You tell us, Ramesh, you know, what should the retail investor look at in terms of the next
Let me
idea?
just give it a slightly different view, Latha, because I think it makes a lot of sense. Suppose there's a basketball game going on and the opposing team, which is real estate, bonds, whatever, have players who are 5 foot tall. And the equity team, which have players who are 7 foot tall. Which team would you bet on? Obviously the 7-footer. Now let me tell you why we are the 7-footers in the equity markets. For no other reason that the government is giving us the greatest handout they can ever give any industry. Long-term capital gains are tax-free in India. You are saving 30% tax. It's unbelievable what's that. Dividends are tax-free in India. That is what makes equities market 7-footers as opposed to every other industry that has to pay 30% taxes. It's one of the great tax breaks we have. I hope first not only look at equities but also understand the power of equities, the compounding and the tax-free nature of that, and which will give us huge advantages.
And I think the patience, you know, in equity, I mean, in real estate and all, people have patience for 15, 20, 30 years. In equities, people, which is a truly long-term asset, but people get tired in 1 quarter, 2 quarters, 3 quarters. I think that's where the game has to be different, where people have to bring patience on the table.
Again, don't look at price, look at value.
Yes. Ramesh, Raamdeo, we have to call it a day, but let me end this show with what Phil Fisher has said, and it's quoted by Raamdeo Agrawal. It seems logical that even before thinking of buying any common stock, the first step is to see how money has been most successfully made in the past. Now, can I give you a better reason to read all the 20 years of reports that Motilal Oswal has put out? That's it on this special show. Thank you for joining.